All right, let's jump right into this explainer. Today, we're unpacking a massive topic in the technical trading world, this super trend indicator. If you've spent any amount of time staring at market charts, you've probably heard of this tool. It's literally got this reputation of being like a crystal ball when a market starts to run, largely because of its scary predictiveness and absolute simplicity. But like any tool, if you don't fully understand how it works under the hood, it can get you into a world of trouble. So we're going to break down exactly what makes it tick, identify its one fatal flaw, and then look at the exact strategies the source material gives us to fix it. To really get this super trend, we got to look at what actually powers it. The secret sauce here, it isn't just momentum, it's volatility. The super trend incorporates something called the average true range, or ATR. By factoring in an asset's high, low, and close over a specific period, it's constantly calculating the size of price movements. What this basically means is that the indicator isn't just blindly looking at whether the price is going up or down, it's weighing the actual magnitude of those moves. By factoring in that volatility, the super trend adapts to the current market environment, which is exactly what gives it its true power and keeps it hugging the trend so beautifully. And because of all that heavy, complex math happening in the background, the actual output is, well, it's incredibly simple. Honestly, this right here is why beginners absolutely flock to the super trend. It has got to be one of the easiest indicators on the planet to read. The rule is just as basic as it gets. Big green up arrow, you buy. Big red down arrow, you sell. It's totally self-explanatory. You don't need a PhD in finance to see that a green line means momentum is shifting upward and a red line means it's shifting downward. It feels foolproof, right? Well, here is where we pull the rug out. It is absolutely not foolproof. This brings us to the fatal flaw of the supertrend indicator: sideways markets. When a market is trending heavily, sure, the supertrend is your absolute best friend. But when the market loses momentum and just starts chopping sideways, man, this indicator will continuously generate false buy and sell signals. If you're out there blindly following those red and green colors in a low momentum market, you're going to get chopped to pieces and it will completely tank your portfolio. You'll literally be buying at the top of a tiny range and selling at the bottom over and over again. We absolutely have to filter out this noise. So here's our roadmap for this explainer. We're going to cover Strategy 1, the 3 super trends; Strategy 2, the 200 moving average; Strategy 3, the Ichimoku cloud; and finally, smart trade exit strategies. Kicking things off with Strategy 1, 3 super trends, filtering out the sideways chop. So instead of bringing in some complicated new tool, this strategy combats those false signals by stacking 3 identical super trends right on top of each other. To prep your chart, you just follow these specific configuration steps in your Inputs tab. You're going to add the super trend indicator 3 times. For the very first one, set the ATR period to 12 and the multiplier to 3. For the second one, knock the ATR to 10 and the multiplier down to 1. And for the third, set the ATR to 11 and the multiplier to 2. Finally, just a quick pro tip to keep things clean, you'll want to go into the Style tab and turn off the long and short icons. Trust me, if you don't, your chart is going to look like a messy Christmas tree. By staggering these exact settings, you're essentially creating a safety net of short, medium, and slightly longer-term sensitivities. And that leads us perfectly to the golden rule for this strategy. You must use strict conditional logic here. If and only if all 3 lines are the exact same color, then you enter the trade. If you're looking at, say, 2 green lines but 1 red line, that's the market screaming at you that it's moving sideways and lacking real momentum, so you do not touch it. You sit on your hands and wait it out until all 3 lines turn green for a long position or all 3 turn red for a short position. Now, this takes discipline, for sure, but it brilliantly filters out that dangerous sideways chop that completely ruins single indicator setups. Moving right along to Strategy 2, 200 moving average, combining short and long-term trends. Now, this strategy elegantly pairs the super trend's short-term accuracy with a massive, and I mean massive, long-term filter, the 200-day exponential moving average. The number 200 is legendary in trading. It acts as the ultimate baseline for overall trend direction. And the logic here is incredibly sound, right? The super trend is fantastic at sniffing out short-term momentum, while the 200-day moving average tells you exactly what the macro, long-term trend is actually doing. By combining them, you ensure you are never fighting against the bigger current of the market.
So here are your strict rules of engagement for this second strategy. For a long trade, the super trend line must be green. And, this is key, the current price must be physically trading above the 200-day moving average. For a short trade, just flip it. The super trend must be red, and the price must be below the 200 moving average. The unbreakable rule here is patience. If the super trend turns green, but the price is still lagging below that 200-day baseline, you wait. You absolutely must wait for the price to cross that threshold before entering. It keeps you on the right side of history.
Okay, let's jump to strategy 3, the Ichimoku cloud, visualizing support and resistance. Now, if you have ever loaded up the Ichimoku indicator before, you already know its default settings are notoriously messy and totally overwhelming. So the very first step is to clean up the chart. Just go into the settings, uncheck the top 3 boxes to hide all those extra lines, and set the plot background to a solid, highly visible color. A nice purple works great. What you're left with is this prominent Kumo cloud. This cloud is a really dynamic visual representation of support and resistance.
The setup here is brilliantly visual. To enter a long position, your super trend must be green, and the price has to be completely above this purple Kumo cloud. Simple. For a short position, the line must be red, and the price must be completely below the cloud. But here is the major takeaway you should really burn into your memory. We never, ever enter a trade if the price is trapped inside the cloud itself or even just fighting to get through it. The cloud represents turbulence. We only trade when there is clear, open air above or below it.
All right, on to the final piece of the puzzle, smart trade exit strategies, locking in the profit. Because let's be real, we've successfully entered some great trades using these strategies, but getting in means absolutely nothing if you don't know how to secure your capital. It is the most crucial question every single trader eventually asks. But how do I know when to exit the trade? It's so easy to get greedy when the line is green, right? Or to just totally panic when the market stutters. We need definitive, emotionless rules for getting out. And this menu of exit options lays it out brilliantly depending on which of the 3 entry strategies you actually decided to run with. The first option is the classic, mechanical exit. Just set a fixed take profit at a 1.5 ratio. The moment your profit hits that mathematical mark, boom, you exit. Emotion is completely removed. The second option naturally pairs with the super trend itself. You simply follow the indicator and exit the moment the line changes color. If it was green and flips red, you're out. Finally, if you're using our third strategy, you can use the cloud. The second the price drops back down and touches the Kumo cloud, the trend is considered compromised, and you exit the trade immediately. These are strict triggers perfectly designed to protect your portfolio.